Hey everyone, this is Zach with Weeklies Financial, and we are back, and I want to walk you through some tips and tricks where if you are new to trading, new to options, and in particular you are utilizing Robinhood, you need to be watching this video. There are a lot of people who have recently begun trading options as a way to hedge their portfolio with all of the current volatility in the markets, as well as a way to manage the risk. The reason that I highlight this information is because options are a great way to make additional income, whether that's through covered calls or whether it's through buying and selling the options and getting that premium. But I do want to highlight that they are very risky and you can lose money. In fact, you will lose money. You're not always going to have a 100% return. So here's a few tips and tricks that I, as a relatively new options trader, have found to be successful, particularly with a small account. The first thing that I want to highlight is if you are new to trading, you need to buy farther out contracts. So as you can see what I have here on the screen, I actually have 2 contracts in June and 1 in July. The reason that I highlight this information is because what you're going to do if you are new to trading is you are going to look at the weeklies, or the stocks that are buying and selling that week. So if I go to Bank of America, one of my all-time favorite stocks, and look at the options, you're going to be looking at May 22nd. You're going to say, I think the stock is going to go up by the 17, and then if the stock goes down, you'll panic. And there's nothing that you can do. You panic, and then you watch the $17 turn into $13, and it says that you are already losing out on 30-40% of your investment, and you sell. To avoid and to mitigate some of that panic as a new trader watching these huge percentages, let me go back to these stocks. If I click on this one, it already says I'm down 9%. If you are looking at that and 9% in a matter of seconds scares you, then A, you may want to paper trade to start this out with, which Thinkorswim, TD Ameritrade's platform, does a very good job of providing the capability to paper trade, which is essentially practice. I would recommend that. But what you can do here is you can view this, you can look at the volatility. I mean, look at just how much the stock is traded over the day. Again, I got in at $1. I was up 18% at one point, and now I'm down 9%. The reason that I highlight this is if you look at a stock like Bank of America over the better part of the past month, you can see that it's been up as high as $25 a share. It's been as low as $21 a share. If that's the case, then over time you can manage that risk and you can momentum trade. And momentum trading is going to be our second point. So the very first thing I would recommend is buy farther out options, whether that is calls or puts. Buy them farther out so that you can manage that risk. The second thing that I want to highlight is we are going to talk about momentum trading, and for that stock I want to talk about Carnival, which is one that a lot of people have been looking at and discussing. So if you look at over the course of the past week, we've seen Carnival go from at the beginning of the week $12.59 to being up as high as $14.50, I believe, nearly $15, and now we're down to around $14. What you cannot do is have this concept of the FOMO effect, the fear of missing out. You do not want to buy stocks when they get to this point right here where you're saying, hey, we just had a massive jump, I need to buy it now, everyone's buying it. If only I had bought here, I would have made a ton of money. You can't do that, because what will happen is the premium changes when these stocks make this huge move. And what it's going to do is, because of that increased volatility, the premium and the expectation that the stock is going to continue to move is going to go up. So what do I mean by that? If we look at these options by the end of the week, look at the expected volatility here. So this premium right here, this call says that the stock is going to move essentially 80 cents more than where it's at right now. So if that's the case, we have to avoid, again, jumping on the bandwagon and saying this is going to happen. Instead of playing this move right here and saying, hey, we're going to be moving all the way up to nearly $15 a share, I would avoid this trade. Now again, I can be wrong on this. If you think that we are going to have some great news by the end of the week and it's going to skyrocket, you can still make money here. However, if you're new and you want to make a safer play, I would avoid some of these momentum trades. The reason for that is when we're looking at the pricing right here, you have to remember that most small accounts are not looking at options as a way that they can hedge their bets, but rather they're looking at options as a way to buy and sell and trade premium or the actual contracts. So if you are the one who's actually going to be holding the contract at expiration, you're not necessarily looking at this contract right here because you don't want to pay this premium at this point in time. You're not looking at being able to buy it at $14.50 when the stock may not move $14.90 at this point in time. So if the stock tomorrow goes down, then your time to decay has actually dropped and you're going to see a decrease in that expected move. So that means this is going to drop, and so if you go from losing a $40 contract to now it's $30, 25% of your investment has been wiped out just because we have one day less. So what we're trying to avoid, and what I'm really highlighting here, is you don't need to try and momentum trade and go with the crowd. You pick a farther out call and you make that move. So the last thing that I want to highlight and the move that I want to discuss is I like the idea of when you're first starting out is don't buy multiple contracts of the same company. The reason that I highlight that is because what you'll do is you'll say, hey, Walmart is going to make it big. I'll look at Walmart right now. Walmart is going to make it big. They're going into earnings. I know that they're going to have a great earnings. Every time I go there, they don't have any toilet paper. So what you're looking at doing is you're trying to make that trade and then you bet it all on Walmart. And yeah, Walmart has great earnings, but then the premium drops. So you pay $4 a share expecting it to go up to $132 and then it ends up only going up to $129 and then it drops. So there goes all your money. You're out your entire investment because you bought a weekly and then it's gone. So instead, what I would encourage you to do is only buy one share, and preferably if you can buy it over time, and not one share but one contract. If you can buy that over time, then what you can do is you can space out your $1, or rather your $100 investment, or your $500 investment, your $2,000 investment. And I'd have to remind you that it's a lot better to see 100% returns on half of that investment and to lose all of it off of 2 or 3 bad trades. So if you make 4 trades with a $2,000 investment and you make 100% on one of them, that's great unless you lose all your money on the other 3. However, if you consistently make money on all of your trades, you're going to do very well. One of the things that I would highlight when you look at this is when we're looking at over the course of the past week, it's consistently buying and then selling, and then buying and then selling. You don't have to do it all at once, and it's okay to have cash in your portfolio as that is still part of your investment. So in summary, the 3 things that I would highlight, if you are new to stocks or if you're looking for some safer capabilities in a volatile market, buy longer term calls and puts. Don't momentum trade, or don't have this idea of FOMO, fear of missing out. And lastly, I would recommend only buying one option per company that you're looking at. If you have any other thoughts or ideas, if you found this content helpful, please leave a like and subscribe, and I appreciate everyone who's been here. Thanks, I'll talk to you later. Bye.